I'm seeing it everywhere. People are losing hope. My feed is flooded with comments claiming that the crypto bull run is over. Confidence has been shattered. Massive liquidation events have created an atmosphere of fear and uncertainty. And the same investors who were wildly bullish earlier this year are now stepping back, exhausted, mentally drained, and scarred by the volatility in this industry. And I get it. Crypto will test your conviction like nothing else. Polymarket predicts an 80% chance that Bitcoin dips below 100,000. On top of this, headlines are fueling fear at every turn, from government shutdowns to trade tensions and to the uncertainty around the future of the US monetary policy. But here's what I've learned. The market rewards the patient long after the impatient have quit. In this video, I'm going to show you why I don't believe that the crypto bull cycle is over. In fact, I believe it hasn't even started yet. I'm going to walk you through why this cycle is unlike anything we've seen before, my personal timeline on when I think the market will flip bullish again, why choosing the right altcoins are critical right now, how to position yourself before the crypto bull run even starts, and the macro triggers that I'm watching that will signal when to buy and when to sell. If you're watching this, you're early. And when this next wave hits, only the ones who prepared for it will win. Quick disclaimer, none of this is financial advice. And hey, this video took a ton of work to put together, so if you find any value, do me a solid and hit that like button. It helps more than you know, and it tells the algorithm that you enjoy content like this. Make sure to watch the video all the way through, because one of these steps could be the difference between making life-changing wealth or watching the bull run pass you by. Right now, this cycle is starting to look very different from the familiar 4-year crypto pattern that we've come to expect. October, historically one of the strongest months in crypto, failed to deliver. Instead of the typical Uptober rally, we witnessed sharp corrections, a massive liquidation event that wiped out billions, and that shook investor confidence across the entire crypto market. As of recording this video, we're facing continued macro uncertainty, continued talks of the US government shutdown, markets starting November in the red, and Bitcoin price action not behaving the way it usually does at this stage of the cycle. In past cycles, Bitcoin dominance tends to rally before altcoins run, and this time the pattern is slightly different. So what does this all mean? It forces us to ask a question most investors haven't even considered. What if this isn't the traditional 4-year cycle? What if we're entering a 5-year cycle instead? I recently heard Raoul Pal explain this compelling idea that the next explosive run for Bitcoin may actually peak in 2026, not 2025. Why? Well, because during 2021-2022, the US extended the maturity of its debt from 4 years to 5 years, effectively stretching out the business cycle, and in turn, potentially stretching out the crypto cycle with it. If that is true, it would explain a lot of what we're seeing right now. The delay, the confusion, and the strange in-between period that doesn't really fit the past cycles. So here's what I think is gonna happen. And I've mentioned this in previous videos as well. The crypto bull run won't be driven by the typical halving timeline alone. It will be driven by macro factors, specifically around the US monetary policy. For this market to truly take off, we need investors to shift back into risk-on mode. And that only happens when liquidity returns. Because without liquidity, it doesn't matter how bullish the narrative is, asset prices simply can't move higher. And this brings us to December. The US is scheduled to end quantitative tightening. For those of you who don't know what that term means, quantitative tightening is when the Federal Reserve pulls money out of the financial system. They do this by reducing their balance sheet and allowing debt to expire without replacing it. So in simple terms, less money in circulation, tighter markets, and a lower risk appetite. So ending QT in December is important because it opens the door for the next phase, easing, which is liquidity injections, more rate cuts, all which historically cause risk assets like crypto to go up in price. So if QT ends in December, here's what I believe we'll see next. Liquidity begins returning into the markets, investors slowly rotate back into risk assets, and then momentum starts building in crypto, first with Bitcoin, then with ETH, and then with alts. And this won't be instant. There will be a lag. But once liquidity starts flowing in again, price action can change faster than most investors are prepared for. But not just any altcoins are going to work in this cycle, in my opinion. There are thousands of coins listed on CoinMarketCap today. And this isn't anything like 2017 or even 2020. 2021. Back in 2017, during the ICO boom, there were only about 1,300 tokens available. Fast forward to 2021, and that number exploded to nearly 9,800, thanks to the rise of DeFi, NFTs, and meme coins, and the ease of launching new tokens, almost a 7x increase in just 4 years. Now here we are in 2025, and the landscape is way more saturated. There are so many coins that it's overwhelming for investors and newbies trying to find real opportunities with strong risk to reward potential. Pump Fund alone has pumped out millions of low effort meme coins. The point is this: when there are thousands of options to choose from, picking winners needs to be more calculated. This cycle will reward precision, not randomness, and most investors are not prepared for this. But for those of you who are in my Discord and that stay locked into the channel, my goal is to get everyone prepared to make life-changing money the right way. You can access the link to my Discord below. Those who get in early will have access to everything moving forward. It's a way to thank those who joined while the Discord is small, because once it blows up, we will have to put it behind a paywall. In this 2026 bull run, it's crucial to focus on altcoins with real strength and staying power. Ideally, true blue chips or projects on the verge of becoming one. There's simply too much noise in the market right now, and because of that, I'm being extremely selective with where I put my capital this cycle. With thousands of these low quality tokens diluting the space, liquidity is being spread thinner more than ever. And when liquidity is fragmented like it is, investors tend to gravitate towards stronger, safer, more proven assets. The projects with real adoption, real users, real revenue, and real resilience. I don't think this cycle will reward randomness. It will reward quality, conviction, and intelligent selection. So then, with that being said, how do we position ourselves for the 2026 crypto bull run? First, it's about being strategic with your altcoin selection. Focus on quality, not hype. Then you want a DCA or dollar cost average into your spot positions during periods of maximum fear, like we're seeing as I'm recording this video. That's when the best opportunities appear. One simple method is by using the Bitcoin's 50 moving average as a guide. Historically, every time Bitcoin dips to the support line, it tends to bounce back and eventually rally. Right now, as of recording this video, it has reached that 50 moving average. By DCAing near this level, we're essentially buying at the lows. If we break below the 50 moving average like Polymarket is predicting, which is very possible, I'll continue to monitor how price reacts and I'll update you in the Discord on my next steps, because we need to also manage our risk. If Bitcoin closes below this 50-day moving average for 2 consecutive weeks, history then tells us that we could be entering a bear market. That's your signal to maybe step back, pull some of your chips off the table, protect your capital, and wait for the recovery before buying back in. This approach lets us preserve capital while preparing our bags for the 2026 bull run, giving us strong risk to reward setups. Of course, there are other charts and indicators that I watch, but the most important one, I believe, is the US monetary policy. Keeping an eye on the macroeconomic environment helps you time your entries and exits more intelligently instead of blindly chasing price action. One of the biggest catalysts for the next crypto bull run is most likely the end of quantitative tightening in December. Now, don't expect the effects to be instant. Markets often take time to digest these changes, but historically, the real impact of monetary easing or liquidity injections is seen in the months that follow. And I believe that we'll see the full effect of this in 2026. Just take a look at past cycles. Whenever Federal Reserve cuts rates or engages in quantitative easing, Bitcoin historically responds with strong rallies. On this chart, the blue line represents the Fed interest rates. Notice how every significant dip in rates corresponds with the surge in Bitcoin price. Now that correlation is hard to ignore. If history repeats itself, and I believe it will, the combination of QT ending and potential rate cuts afterwards could trigger a surge in liquidity into risk assets like crypto. This is exactly the kind of environment where early, prepared investors can see potential gains, while the majority remain sidelined, caught off guard. Then we'll also have Jerome Powell stepping down. Leadership transitions in the Fed often bring increased optimism for the markets as investors anticipate more accommodative policies or shifts in strategy. This could create huge liquidity inflow and euphoria across global markets, which is stocks and crypto, and that will start the crypto bull run. So these two events, the end of QT and Powell stepping down, could create the perfect storm for crypto bull run in 2026. At the end of the day, crypto isn't just about chasing pumps. It's about understanding cycles, macro trends, and human behavior. It's about seeing beyond the fear, reading liquidity flows, and positioning yourself before the crowd wakes up. If you approach the market with discipline, if you respect risk, time time your entries, and understand the bigger macro picture, you can put yourself ahead of retail investors. Because honestly, 99% of people in crypto will panic when they see red, or they'll chase when they see green. But the 1%, they're doing what we talked about in this video. They're studying the macro catalyst before the bull run hits. They're choosing altcoins carefully, focusing on quality blue chip projects, or those on the verge of becoming one. They're accumulating during periods of fear, buying near support, and keeping an eye on liquidity, interest rates, and the Fed. They're preparing now with strategy, conviction, and patience. This isn't easy. The market is volatile, unpredictable, and emotionally charged. But that's exactly why the rewards are so significant for those who are prepared. So as we head into this next phase of the crypto cycle, remember this: don't chase, position early, stay disciplined, study the macro, and respect your risk. Because what happens in 2026 can be the moment that changes everything. If you're new to investing and you want to learn how to build $1 million investment portfolio, watch this video here.